It's the most wonderful time of the year. Not only is it a time that we all get together with our families and do all these traditions, but the Feds have decided to pivot at the end of the year, starting December 1st. That's when they're going to announce it to move away from quantitative tightening to quantitative easing. What is quantitative easing? It is pretty much them saying we need to take our hands off of this pressure that we've been putting on the economy when it comes to these interest rates. We want to make it easier for banks to lend money so businesses can maneuver, mortgage rates can drop a bit, and the economy can stimulate. This is the time they also print money. When they do these things, it's more strategic move towards putting money inside of the economy to move things a bit. That does have a side effect because, as we've seen last time they did that, it caused the rise of inflation at an accelerated rate. And what happened? You saw your grocery prices went up. You saw insurance prices went up, property taxes, utility prices. I remember the electric bill was like crazy, the gas bill. All these things happen all at the same time, and it creates this super pressure. And they had to increase the interest rate at such a rapid rate to combat it. And it came down. It was all the way up around 8%, came all the way down to harboring around 3%. They did a good thing and they held on to that. Even though it hit that 3% mark, they held on to that for such a long time, about a year. Do I feel this is the perfect timing for them to do this? I personally think they are on the right move because of what I'm seeing happening in the economy. I am seeing some stimulation of jobs. Even before they doing this, companies are hiring. Even though you're hearing the bad news about all these layoffs that are happening, there are motions and movements inside of the economy. I am in the Northeast region, in the New York City area. The tractions that happens over here, it might not be exactly as it is in your area. There might be some layoffs happening. When it comes to home prices, I'm seeing them pretty much stagnant. Rental costs is pretty much stagnant. There are things that are not moving quite a bit. And I think the Feds are realizing that, at least in some major parts of the economy. And I'm sure New York is one of the most accounted places for all that. The minute that they start doing this money printing, how can you prepare yourself for it? And what does this mean for you? Don't keep yourself out of the markets. I'm talking about the equity markets. So that includes home, includes stocks, includes crypto. Because the last time they did this, what happened? Prices of crypto went up. Prices of stocks went up, all-time highs. Prices of homes went up, and they still have it going down. And then the interest rates went up on top of that. Rentals went up as well, and that's where all these factors come in. So you want to make sure you're on that other side. You don't have to have all these things at the same time, but what you can buy, easy access, is buying stocks. And you don't have to be a rocket science when it comes to figure out what to buy. You could simply buy the broad market of the S&P 500. There are different ETFs you can do to purchase this. I prefer QQQ. It's from Invesco. I've been steadily buying $100 a month since the beginning of the year. And during these times right now, I'm putting more. I'm going to go to 500 every single month. So that way, as the market is rebalancing and reshifting, I can keep a steady flowing of money going into that, and it's going to increase in the economy. And year to date so far, I'm up 10% by doing that practice. Bitcoin, I've been buying it, same thing, $100 a month. And I also just did a one-time purchase after I seen the dip went all the way down to like 80,000. I just put $1,000 into Bitcoin. The other cryptos, I haven't done in touch much more, but I did buy a couple of individual stocks over the past couple of weeks. The reason for this is those dips, they don't happen all the time. Every time they happen, they create an entry point. You can keep your recurring things going, but if you're double dipping when the dips happen, you're going to have a nice return once these prices return back to what I consider a normal rate for where the economy is at the time. That's one of the ways you can make sure you're not getting left behind. When it comes to the home purchase, it's a more complicated, more involved. You got to do more. If you're thinking about purchasing your first home, maybe instead of looking at just buying it for myself, might be looking at a multifamily situation. Again, it's not for everybody. It's for those that have the patience to understand that I'm going to be renting part of it and then living a part of it. And that's if you're doing the whole FHA thing. I'm not referring to investment properties right now, really for the person who might be a first-time home buyer. I'm not saying right now is a good time, but it's always a good time if you can find something that mathematically makes sense. Look at how much the house is bringing in terms of the units that you're going to be renting. If it's a 2, 3, 4 family, you have to live in one and rent out the other. So if you total what the others are rented for with your mortgage, can you break even and stay in that one unit that you have to live in for almost free? Because when it comes to it, all the repairs are on you. You can't just file insurance claims left and right, especially the fact that insurance prices have increased quite a bit. You want to be careful in terms of doing that. When you have to do those $20,000 repairs, it's going to be all on you. So you want to ensure that you're able to save as much as possible. Roofing, plumbing, all these things, they're not cheap. Electrical, they're not cheap. But at the same time, you're not doing these things every single day. Those are like one-offs that you're doing. But you have to be prepared for it. So the money that you're saving, you can't just go out and splurge. It's a different mindset that you got to have if you're going that route. I think it's an easier thing to do than instead if you had a single family, it was just you, then no income coming in. All the expenses is on your income while you're trying to save in case those $10,000, $15,000 repairs are happening. You got to do that while you're also paying the mortgage. And that's where the stuff really tightens up. So that's the other side of it. Crypto, you could do the same thing. Yes, you could buy Bitcoin, Ethereum, but there's also large cap stocks that you can buy. Grayscale has one. The symbol for it is GDLC. You could recurrently buy it, and it exposes you to a lot of crypto because they're the ones that's managing that ETFs in terms of what crypto they allocate towards it. Grayscale is a company that I've known for quite a bit, and you can actually purchase this on Robinhood, Charles Schwab's, and most of the other brokerage platforms. The other side of it all is this perception of what the stock market is. I want to use two examples. Tesla, for example, versus another competitor called BYD. They're based in China. Tesla is valued as a bigger company. It has a $1.3 trillion market cap. BYD, on the other hand, has about $130 billion of market cap. Revenue for BYD was higher than Tesla this year. Their revenue may have been lower, but it was much higher. So how do you piece the two together? Because it's not like Tesla's making 10 times what BYD is making. Not at all. If anything, BYD is outpacing them in revenue. Profit, yes. But the way you got to look at it is how the media portrays things and how Tesla stands up. Remember, the stock market is based on people's perception of what they think will happen in the future. So people are doing these purchases because they think Tesla will be this multi-trillion-dollar in revenue company down the line. They're not there yet, but they do bring in quite a bit of revenue each year. And Tesla has a lot of things going. You got to think about the robots. They're in solar. They're doing the space programs and all these things, which could potentially explode to an extraordinary measure, especially with the space stuff. If you have all these billionaires, there's a good number of them that are just flying back and forth. Will that be a good profitable business to have down the line? I don't think it's something that's going to happen in the 5-10 year mark. It might take a bit longer. But if you're buying the stock now and in 20 years, the stock goes to 30, 40, 50x from what it's priced now, then yes, you got this at a discount. But BYD, on the other hand, they are a good competitor. I'll see China as they will outpace us when it comes to efficiency. They'll always find a way to do what we do for less. It may not be as good of a quality, but they will figure out how to do it for less. I think when it comes to cars, electronics, and things like that, yes, they outpace us. There's no need for us to try to compete with them doing all this manufacturing here. We will never be able to catch up, especially for the wages that we're able to pay. For our economy, it just doesn't make sense. But for them, if you see their hands working, they move pretty fast. And that's just how things happen accordingly. And I'm sure Tesla is purchasing parts and different things. They still are doing business with China. You cannot just build everything here in the US. We just are not that efficient, but we're good for business. Like, we are consumers. We flow money through. We know how to delegate certain things. We are like the business capital. And that's why New York City is here, where Wall Street is. So all this inflow and outflow that's happening within the US, yes, we have the control for it, but I don't think we need to be able to do everything. The productivity doesn't really need to come from us, but the business side and the strategy, yes, we can completely control that. Be prepared, y'all, because once this money printing starts, if you're not on the right side of the track, you're going to get left behind. We're going to have another repeat of what happened between 2020 to about 2022. It creates opportunities, but it also creates situations where people get left behind. So don't be on that other side. So peace and love. Trust in Jesus. Have an amazing one.